actually open Twitter. Oh, I need to do something. No wonder Twitter is actually first thing on my list because I forgot to do something. Nothing important. Taking DMs, I had a one. Yep, I need to do that form. So great reminder. Twitter not important, Instagram not important, YouTube is important. There you go. Let's play the ocean. Don't know how that sounds. Let me check. Can hear it. Okay, let me check. No, I was actually listening to some really chill music. What was it? Like jazz. What was it? Like lobby. Bro, like full night lobby, bro. Or hotel lobby, I swear. I heard like such a chill jazz. I don't even know, man. This lounge. Bro, I was chilling, yeah? Waiting for a meeting. I had like chillest. When I say chill, that was different, man. Okay, we'll just leave this. Like, this is better than nothing, let's be honest. I'll leave this on. This is better than nothing. I'll keep it 100. This is better than nothing, guys. Cause like they're gonna do me dirty. YouTube just gay, man. Cool. We'll leave it there. Yep. Boom. Boom. Fortnite Festival playlist, lads. No. Wait. Adding a song every day. I think I haven't done today's, innit? No, I did. Wait, why did I add this one? That's not even a... I think that was yesterday, though. Or is it today's? I don't think this is a valid song, no. Like, it's a good song, alright, but... Cause I did it... What was this one? Oh... Okay, I might get like copyrighted, but I'll take out this part if it does. Look, this song I really like. It's like a jazz. Hear this. Yeah. I did that when... I'm so confused. Cause today is the 25th. So why is there 6 exactly? This was today's song. There you go. 24, 25, 25th. I'm adding one every day. So like every day there's like a song, a purpose, you get me? Yeah. Journaling and that. Keep it intentional. Okay, wait, if I play this, I might get like copyrighted. So we're not gonna play that. I'm gonna play that on my AirPods. There you go, guys. If anyone watches this back, at least it's chill, you get me? It's not just me. Okay, let me see. Okay, it's working. Okay, we're gonna break down. I have a list actually. Okay, we're gonna put this on. Okay, we're quickly gonna break down Euro USD. What's been going on this week? So you got a crazy start to the week, you get me? Let me see if I can bring it down. Because I kind of just made it all messy. If you want, matter of fact, let me just add everything from this week into here. Because, yep, that's what we're doing. I don't even know what group 8 is. It's not important. You know what? Some of the stuff is not even here. No, it doesn't even matter. Because you know what matters? This right here. So yeah, let's just go to the start of the week. Our time frames, open this. Because this is like, I was barricading the weeks. So if we look at every day's kind of story, right? So this is like days, obviously. That separates the days. So this is Friday. And we can see what happened, right? Let's just take a look. And we also obviously have to look at the past. So the most relevant area to us is obviously this one. And this kind of area where price ran very quickly. Because you just need to look at parts on the chart which are significant. And when you look at it from like we ignore the future, right? At that point, it's Friday, right? The only important thing to us was this, because obviously, if this is like a big push downtrend, let me open a new USD. I'll just do it here. So obviously here, if we look at the chart from this perspective, right, the only thing that points out to us is this area, guys, when we look at it from this perspective, and that, and guess what, did that area get touched? Obviously that inefficiency, and in fact it's an area where this returned to. So on Friday last week we returned to that. So starting the week, you have to really point out those areas and really decide whether they are relevant to you and your story. The annoying thing about this chart is it has no volume, so it's you can't even use this tool. So this is a really bad chart. So even another one, capital. Cool. So yeah, as you can see, we got this. It's the same chart, but what's important is you can kind of still play it back. What I like to do is a whole swing. So obviously this whole area where essentially the market went down, so I might have missed that trade in fact. So what's significant to me when I use this tool, I'll explain in my course, but it's this. Essentially when you get this, right, a push up that's significant, this is significant, this is less significant, this is significant. The reason it is because of the simple law of cause and effect, right? There's a cause and that effect is what's the aftermath, you can say, right? So what's it trying to teach, what's it trying to tell you? And that's what we get here, right? We get that same kind of thing. Push down, which is significant, you have to analyze that. Push up, push down, analyze that, and then you get the push up, because that's simply market structure, which I'm going to teach you. The only thing about this market structure is it's a bit difficult to read, since there's larger significant moves being made. So on a larger time frame, the same thing is occurring, right? You're getting a push up, but guess what, on the 2 hour this is gonna look completely microscopic, because you can like do the exact same thing and look, break a structure, boom, you gotta trade that short. I don't know, you could have got that one, boom. You see, there's the small things, and you have to really get down to those points which are significant to you and ignore what's irrelevant. Because here I wouldn't have said anything significant until we break this point, right? And guess what, we broke it here, which is exactly a good point, because why? Because we broke this structural point. So it shows us we're most likely gonna pivot or change direction to the downside. As you can see, breaks, because it no longer does a zigzag, it's now going to go that way. And you can tell that because the markets move fractally. It's a higher probability trade when that happens, obviously on a higher time frame. The higher you get, the higher probability, but the lower but the lower trades you're gonna get into, obviously, because it's gonna happen less. You're gonna maybe be less on the chart. See, this is all. The thing about trading is it's so based on circumstance. So I'm saying a certain amount of probability and really strategically positioning in that set of probabilities. So the thing is here, you just need to rule out what type of risk you're willing to take, and yeah, actually taking that risk. It's no point of waiting on that something to happen that you're not gonna do. So a lot of people do. Okay, now the thing about this one is that this area would have been the one I would have been looking at. Why? Because there's the most volume there. Second would have been this area, and I would have thought, okay, we might get erection. So I might have lost a trade there, in fact, because look at that, right? that's an area I might have looked for a short because of this accumulation of area, but I would have definitely taken a look at that because it's inefficiency and it usually gets liked. Price is attracted to that areas where the market's too clean in terms of tops, or things that just structurally stick out. You know, it's like an art piece. You can kind of tell a certain structure, and because of that, you can make a decision like this right here. And this looks quite close in terms of the candles all lay in a certain region, and look what happened. Price was gravitated towards those areas and it came down to take. That's a concept called liquidity. I won't be teaching that in my course for now, but I believe at some point I would like to move on to that, but it's not a main topic for beginners. In terms of trading, you just have to see it in your own way, but if you kind of notice that, right, these all lay in a certain region which are in proximity. We're obviously talking about market structure here, which makes sense with our picture, right? This areas which there's there's a lot in that same region. Market structure is telling us that it's still wanting to go down now, so that leaves us with shorts, and that's why our daily bias would be bearish. So you're looking for shorts. Of course you can take longs, only means that you're gonna be in a higher risk position, and that's on you. If you're willing to take that risk on a trade which may result in a loss, and the way I would do this to help you is use this. If you want to like look at the dailies, you know what's happening within the day, within time zones where larger volumes being traded. So let's look at this on a 1 hour together, because it's how I traded this week. I just looked at whatever each day is saying. So as you can see here, the high of the day was there, low of the day was there, right? The next day, what happened? So this was Monday. Tuesday was quite quiet in my opinion. Of course, this area, in my opinion, looked quite interesting. We actually did get a trade off there. If I didn't get it, if you did, it was an okay trade. I mean, there's volume there telling us short or something happening. I mean, if you believed structurally, right, we broke upwards, we're looking for that downward push, and yeah, it would make sense. It would make sense to go for a long, certainly. And if we line that up with the Fibonacci, so proportion to that wave, what we find out is this. So yeah, I think everything makes sense so far. The charts are not too packed, so we're fine. I'm gonna remove some stuff as we go along just to make it cleaner. I understand people like clean charts, so these are some good fibs numbers to use. And what happens is obviously within that area we are in the proportion of that push, and therefore you get that. The only problem is obviously it's a different topic when you're talking about placing the actual trade. You can know the direction, all of this, but actually placing the trade is a skill in itself. So of course entry probably there, right, on the start region, depending how you want to strategically take that, and I would suggest at the end, right? And the highest that would give you is a 1 to 2, like at max. And thing is, you'd probably be aiming for the liquidity there. So yeah, we literally 1 to 2 I'd give it, and you might have missed that by the slightest. It's not a good way to go, but it is what it is, and that's why that was not a valid trade. I didn't like the pip range we were in either, because either way that's from here to here. I mean, that's still a 1 to 9 if you catch it, if I'm honest, because I usually risk 10 pips anyway, so I might have been trying to get it a bit in within. It depends, you know. 15 minute you could probably cut it down to. That's where I like to cut it down to 15. And do you notice anything is the main thing, because obviously look at the morning what it does. And from there you could have taken a trade. In fact, you could have noticed this break right there. Obviously looking back, It's easy, you know. Looking back is so easy, and that's why I want to really push. Look on my Instagram page and look how I strategically looked at this week. I'm gonna actually make like a little highlight of each week just to show, you know, the progression, you know, each day in and out. That's just how it is, you know. You gotta always be there. If you don't stay disciplined, how do you expect to get somewhere? And look at that. That Fibonacci lines up with this Fibonacci. Do you see that? Look at how that lines. So yeah, this interesting, you know. The lines line up, but we didn't in fact get a pullback, fortunately, because we're looking at this swing like this. That might have been halfway through, but I didn't take trades off that on the 15. It's a bit too high up for me. So yeah, it is perfectly on it. So that's a very significant one. That's called equilibrium in terms of a wave. And yeah, you had a trade there in fact. You could have gone on the 3 if you had big bulls. Let's see what you could have done. So on the 3, we look at this price. Now we broke that, right? So we're looking at, we're trying to get a break. So you get this, push, See, we're trying to get in here. On the entry would either be, you know what we're gonna do? You must know me by now, if you've watched a couple of these. We would have tried to aim for this, I'll be honest, and we would have missed that entry. So see, sometimes you just don't get it. Like, that's just how it is. See, I wouldn't probably ever go into this one. It's a bit hard. That one was a hard setup. I don't know if I got into that one, but I'm gonna have to check my trades, man. I don't know, man. Like, I've been placing a couple this week, man. To be honest, I've been a bit tired. I know I won a couple on Euro, like a couple shorts. That's what comes to mind. But that was last week. That's why I'm like, what, longs? I know, was it long? Well, yeah, you kind of get the picture, right? So now we're gonna go to this week. See, I was looking back on another week, man. That's why I was so confused. I was like, this looks new to me. Okay, there you go. So if we look specifically, obviously that would have been a long setup we went for, and then boom boom, we got a breakdown in fact of this, which is still continuing the picture we had, because we were always expecting boom boom boom.
Sayry took my
wrote here, guys. Let's mark some simple things out. We have that main high from last week Thursday. It's a peak, which is important to you guys since we're obviously on a negative direction. So anything that forms high is a somewhat catalyst to push downwards and must be looked at to support your entries to the downside. As you know, the direction is that from what we just discussed. That's how I would break down. I'd go, yeah. If I actually was proper, you have to go on the daily. Matter of fact, weekly. Start on the week, go to the day, go to the 4 hour. 4 or 2. That's how you actually know. 4 or 2. Then, boom, 1 hour. I like 1 hour is just clean. 1 or 2. 2, for example, look, that area might have been missed, but it's a bit hard on the 2, I think. 2, I like for just like very, very clean points of entry. 2 hour just, it's very clean, the areas you get. But 1 hour I've been trading this week and I've really liked it. Some weeks it's just like that, I don't know. I've traded the 1 hour this week because I've been looking at in this fib times and this looked very nice. So as you can see here, guys, we formed similar highs there and then we got raided there. And that was actually a perfect trade we got because that was in our area perfectly, and that was a nice, very, very nice short. We took that trade. Further, we got a trade on a Wednesday. I'm losing track. I thought today was Friday almost. So yeah, then today, was that today? Today that was almost an opportunity. Generally that was actually. I didn't even realize. Ah, that was. I think I was looking on the 2, that's why. I don't even know. I think, it's because I was looking on such a small. Look, I was looking at that area. And look, we tapped it, man. That's the trade I was looking at. That was a mad trade, by the way. Imagine. Yeah. Okay. Today that was actually a good sell. I'm not too bothered. I hit my goal with that trade. This is my best trade of the month. Actually, no, this month I had some really nice setups, nice trades. But that trade was something else. Like, I love that one, man. Yeah. Back to what I was saying. Of course, any points which are structurally significant, you have to just point them out, man. And obviously, let's just do this on this other pen. Anything that's a high or a low within the day is important to you. And as you can see, what do we notice here, right? You need to see this. So on the day, we essentially set our ranges that will create a further range. What do I mean by this? That by looking back in the history of these candles, or you can actually formulate whether you're trying to move. It's hard to see initially, but you kind of, as I said, gravitate towards these areas when we talk about market structure, which is in fact downwards. I kind of deleted it, but alright again. Downwards, okay? We are looking down. So how can we best set up something downwards? What's the most significant swing? It's this one. We could say it starts there, but I feel like that was some news event. Probably is. I'm not gonna check the date because it's gonna use a bit of time. So yeah, this area is somewhat significant to us, yes, and this one is as well. As you can see, there's a bit too much accumulation of candles that if it does happen, it happens, right? And I like this area significantly. You know why? Because we got 2 taps there. I wouldn't have taken this trade. Maybe I did. I think I actually did on Monday. I did. Yeah, I did. I remember 2 shorts. I might have lost a bit on this one. Yeah, I did. I took a small loss actually. I remember that yesterday. And this one we missed. Okay, so obviously we have these highs here, and that was the biggest kind of red flag, because what do we see here? Clearly, yeah, it's going to be attracted to that in this zone, within this zone. So what does that tell us? Zone that is allowing us to go downwards, area where price is going to be attracted to, of course is going to move up to there and give us a setup. That setup is more than like an indication, in my opinion. That's my strategy. You see that? And that's the high of the day, right? So two high of the days are telling us these are ranges. We're gonna create a new range because we haven't formed that top of the zigzag, right? We are within the formation of that top of the zigzag, which is exactly what's happening here. You see what I circled? That's happening here. So you need to best set up, because that's a dangerous area to be in. Don't get me wrong, but look at the profits. You get 1 to 9s, you get 1 to 5s, you get 1 to 3s. That's 3%. 1 to 3 if you're risking 1%. That's 5% if you're risking 1%, 1 to 5. These are things which you can catch on to. And look, that doesn't mean you're going to overtrade. It means I'm going to trade smart. I'm going to trade in a way which is going to let me be profitable in the long term. That's always the goal. So let me break this down. So yeah, if you want, I can actually take out some of my trades I've done this week, because there's some good ones, to be honest. Yeah, but 1 hour areas, man, I'm gonna use that for next week more, because that area was actually nice. Look, thing is, I don't think I would have marked that, you know, because it is significant. I believe on the 15 it is, because that area broke and I marked that on my chart, I remember. So this was significant to me, so I would have done that downward move area, and we actually did in fact get that zone. So it was a valid trade from the zone, and we did in fact get that, and that was such a nice trade, man. That was tapped it slightly, boom, breaks down. You don't get better trades than that, and guess what? Hits exactly our target. Look at the target. Do you see that? That's your target, because that's the range where price is attracted to. What's the lowest target? Boom, boom. These two targets got taken by the new target that got created by taking that old target. Now you have this target. If you need a better confirmation, you don't trust the target, you create your own targets, because you're that guy. You do this. Put the fibs. I'll give you some good numbers. Look, -1. -1's always good. You want to take some early ones. This is always -0.1. That's a very good one. I love taking -0.1 profit. So you can always get like 1 to 2.5 R. That's beautiful. Look at that. It would have been up 5%. Take half of your trade out. Stop to break even. No risk. Let it run to full. Look, almost at 1 -1. So the exact kind of double the length of the initial wave, essentially. So whatever this length was, this area going for is double. So from whatever proportion you took, you're taking a very big chunk, almost 1 times that. So it's quite significant, man. Yeah, but that trade was beautiful today. Didn't get into that. Look, transparency is key, guys. I don't need to lie. What do we see there for tomorrow? I'll be honest. Let's see. So yeah, same thing here. So let's just get rid of some of this stuff to not confuse anyone. This rectangle, see, we can get rid of this one, I'll be honest, because now we know that's gone. And what's the most significant one? That one was significant to me, and I believe it's going to be significant tomorrow, in my opinion. So what do we see? So if we are to be smart with this, right, I would mark out this. This is obviously the highest of the range. You need to know that. Lowest of the range, boom. So now you have the highest and lowest, and I would actually argue that these two are equal, which is so good for price being attracted to the downside, which is what exactly where we're going right now. That just helps us even more, you know. Okay, probability is on your side. Simple as that. So what do we do in this situation? You might be like, oh, I don't get this. It looks confusing. It does look a bit confusing. But it is what it is. You gotta just deal with it. And by doing that, that's the most significant wave that's recently happened. And look at that. We have that perfect thing. The thing I don't like is that area, of course. Personally, I wouldn't take it from this area, which somewhat looks significant to me. Sometimes I use this to help me point out these things called S&D 2.0s, which this would be characterized as one, but it's very weak. And I still like my old area that I was using personally. That's a more refined area, you could say. Generally isn't bad. So we could just leave an alert, and I would actually want to see some reaction happen. So within here, on lower time frames, a breakdown of structure, because it is a Friday. CPI, guys, CPI. Oh, that's funny. CPI, boys. Only means one thing: price is gonna go crazy. And guess what that means? You could clearly break up, take that new range, create a new high, and just break down price. And I think that's exactly what's gonna happen. But who knows? You can't break the news. And yeah, that's pretty much it, man. I just see that as an area we have to look at. This is our range. We are aiming for this as our profit, as one of our profit levels, but we have to look at larger range profit levels such as that. This is a very nice one, obviously, because it's structurally appealing. This one not so much, but it's valid. It's valid. It sticks out. Look at that. So does that. But in my opinion, once it breaks down, that's just a wick. It's gonna break down. You always have to look at price. Like when it gets closer, Like when it passes that point, you can say, okay, yeah, there's something going on. Is price really that strong to the downside? How are the candles looking? You know, these things are important. But let's see. Yeah, man. Just let it go up. Let it fly a bit. Take profit here. So I take it a lot. I do that now. Let's do it. By the way, I'm doing a stream because I didn't stream yesterday, and I said I would. That's my bad. There you go. Put on the alert. Okay, I put it on the wrong one. Put it on this chart, which actually has all of my markings, which is similar to what I just discussed. So this is actually what I used to trade. As you can see, I marked out that high got taken, and so did this area. Which we're gonna practically create the same chart. Genuinely create the same chart. Hide that. Literally equals. I mentioned that. Remove that. So your alert, I'd put at there, 1.0901. That's it for that. Apparently my alert got triggered here, but we're still waiting for this structure to form. So we got that point down. We're still waiting for a point to form essentially higher than this dot to be structurally significant to me. Because it looks like it's gonna push down. Okay, slightly push down. So we're actually trying to go up to here. Yeah, I remember. So this is our target, which is a pip range of. It's a good range. 400. That's amazing. It's a good range. Very good range. Yeah. So we're looking for this push down into here, possibly long, simple, or. The important thing is once we break this, then we can analyze what happened. This, because the move we're waiting on is this, right? We got this, boom, breakdown. So structure's changed. This means price may be distributing or reaccumulating. The way to see that is in, this is phase A, because let me just write A instead. This is Wyckoff theory, boys. A preliminary support, which is very important level. This is somewhat important to us, and therefore you could mark on your chart or just really put your cursor on that. It's important. What we want to see here is a push from the weak hands, they call it, which will bring price up here. And what you want to see here is a very big push down, create something, and that will push up. That's essentially the basics of that theory. Or we don't get that push down at all. In fact, we stay within here and we push up. And that's either reaccumulation, or what I expect to happen is a distribution, in fact. So it's where we get that. Not even a full push down. Push down. Matter of fact, you could get a push down. No, alright, take that back. No, because you had. Yeah, no, that's right. No, I'm wrong. So yep. And the test. So that's the test of that area there. And you can get a last point of support even. So test of the test of the test. Test of the initial test. Of the test of that test. Of the initial test. Too many testing. And that's what we see there. So I don't really want to watch UJ until it forms that, of course. So it's really, I think, the point higher, right? Yeah. So yeah, we just gotta wait for UJ to do something, because it's a bit boring to stay in a range that is how much? Actually, it's not a bad range, but today, has it been that good of a range? Doesn't look like it to me. Nope, not at all. So I'm happy to leave it until we break that. Genuinely, I don't need any like rush in my life. This, yeah, we're just waiting on that reaction of the reaction. So obviously this zone created that zone. Very interesting fact that price is going to be attracted to those zones, those points. And now we're going to push up, hopefully, to test that test, maybe create that again. We're really just going to watch how price reacts. Oh, sorry about that. We're too tired, man. Tired of nothing, because I ain't tired. 2033 was. And that's it. That's our alert. You let price do its thing. Matter of fact, if you want to be safe, just put like 31.25.20. Yeah, let it just get alerted a bit before. Why not? That's it. I am gonna head off. It's been like an hour almost. Let's just see what Bitcoin's doing, and then we're gonna head off. It's been a good little stream. Love to see that, man. Don't think we're gonna get a test, I'll be real. Pushes down isn't as significant yet, we have to wait. Yeah, we need to copy this onto our other chart, remember. This chart with the volume. Price will make it come up like that in due time. So that means CPI could be positive, right? Yeah, now that's interesting because we actually predict a push down or a push up, matter of fact, from the area we're in of Ethereum, which would really interlink with what we expect a push up here by Bitcoin. Litecoin, you know, we're just expecting Litecoin to fly a little bit. So really, this is saying that news may be positive side. If it's not, it's really gonna mess up with what we see on the technical side of things. Yeah, Only Price has its own story, boys. Check out the other streams. I broke all of these down on stream. Okay, that's it from me, guys. Thank you for watching. If you watch this back at some point, appreciate it a lot. You know, we just work hard every day. Get what you think you deserve, and that's it. That's the only advice I can give. Don't wait for things to happen. People ask me, like someone actually asked me today, they were like, what's some advice for a business? And I was like, don't wait. That's it. Don't wait. 2 words, literally, don't wait. I think that's the hardest hitting kind of advice. Literally, don't wait for things to happen. If you have to do your thing, you have to get it done. Don't let people choose what you're gonna get done. Whether it be completing a chart, whether it be whatever, get it done. Especially in the trading world, because you have to have your strategy and you have to listen to your strategy, not what XYZ tells you. It's an abstract world in trading when you look at it in a technical point. Of course, you can get it into this fundamental view, this quantitative view, all of these things, but you need to decide that on your own. As you saw here, I broke down through my understanding, which I'm gonna teach on to you guys. Hope you can learn, maybe just by watching a little bit. I know it might be a bit difficult, I get it. I've a bit of years, months on some people for this, but look, nothing's impossible if you set that limit. Alright, that's it.